gentlemen, good day and welcome to the Q1FY2024 earnings conference call of Electrosteel Castings Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Verma from Ernst & Young LLP. Thank you, and over to you, sir.
Thank you, Vidya. Good afternoon, everyone. Welcome to the earnings call of Electrosteel Castings Limited for Q1 FY2024 results. Today, we have with us the management represented by Mr. Uddhav Kejriwal, Whole-Time Director, Mr. Madhav Kejriwal, Whole-Time Director, Mr. Ashutosh Agarwal, Whole-Time Director and Chief Financial Officer, and Mr. Gaurav Somani, Joint General Manager, Finance. Before we start, I would like to remind you that the remarks today might include forward-looking statements, and actual results may differ materially from those contemplated by those forward-looking statements. Any statements we make on this call today is based on our assumptions as on date, and we have no obligation to update the statement as a result of new information or future events. With this, I would now like to invite Mr. Uddhav Kejriwal to make the opening remarks. Over to you, Uddhav.
Thank you. Good afternoon, everyone, and a warm welcome to the company's Q1 of Financial 24 earnings conference call on behalf of the entire management team of Electrosteel Castings. Highlighting the company's Q1 operational performance and the business opportunities, Electrosteel Castings' consolidated total income stood at INR 1712 crores, marginally down on account of planned maintenance shutdown at Srikalahasti plant in the first quarter of the financial year. Electrosteel's long-term bank loan facilities have been upgraded by CRISIL from A+ to AA-, and the short-term loan facilities have been reaffirmed at A1+, respectively. This demonstrates the strong financial performance and the strengthening balance sheet with the support of all the stakeholders. During the quarter, our ductile iron pipe sales volume stood at 155,137 metric tons, and the domestic to exports mix stood at 80-20. The government's flagship project, Jal Jeevan Mission, for connecting every rural household with tap water connection, has achieved 65.4% of its nationwide target till date. The Jal Jeevan Mission has benefited 9.5 crore rural households with safe access to safe drinking water. Out of India's total 19 crore rural households, nearly 12.8 crore households now have access to safe drinking water. Electrosteel continues to be amongst the key beneficiaries of the water infra spends, thanks to its industry pioneer and leadership position in ductile iron pipes and fittings, backed by nearly 7 decades of rich industry experience and 5 advanced integrated manufacturing units in India. The company's quest to work an extra mile for delivering customer delight, along with R&D thrust, not only helps to maintain and widen relationships with existing clients, but it also helps to attract new domestic and export marquee clients and key projects. The ductile iron pipe and fittings industry is currently gaining higher domestic as well as global attention for the need to secure drinking water safely along with robust wastewater management. The company is likely to maintain its leadership status with its ongoing capex plan, visible cash flows, and the debt-reducing stance, resulting in a stronger balance sheet. Electrosteel is one of the first ductile iron pipe companies in the world accredited with the ISO 14001 certification, along with the Social Accountability and Responsibility SA 8000 certification. The company continues to implement several environment, social, and governance initiatives aligning with triple bottom line sustainability towards people, profit, and planet. I would now like to hand over the floor to Mr. Ashutosh Agarwal, our Whole-Time Director and CFO, to take you through the Electrosteel Castings Q1 financial highlights. Thanks.
Thank you, Uddhavji. Good evening and warm welcome to all the investors for joining this call today. I would like to start with Q1 results. Consolidated performance of Electrosteel casting was slightly down from the previous quarter, and it is 4% year-on-year basis. The turnover is 1,712 crores. The turnover is down by 4% due to planned maintenance shutdown of the Kalavati pipe during this quarter. EBITDA stood to be 187 crores with an EBITDA margin of 10.9%. The slightly dip in the EBITDA is on account of shutdown in the Kalavati plant. PAT was 75 crores in the Q1 and PAT margin was 4.4%. I am talking about standalone results of Q1. Company total income stood to rupees 1,530 crores against 1,751 crores of Q1 23. EBITDA stood to be 184 crores with the EBITDA margin of 12%. PAT stood to be 81 crores and PAT margin was 5.3% during this quarter. During the quarter, company did net repayment of 35 crores of long-term debt. The company net debt stands to be 850 crores as on 30th June 2023. Gross debt has come down from 2,450 crores as on 31st March 2023 to 2,200 crores as on 30th June 2023. Highlighting our capex update, as mentioned earlier, the company planned to ramp up its existing capacity from 6 lakh ton to 9 lakh ton per annum, and it will be achieved by FY 2025. Thereby we are focused on maintaining the leadership status in the industry. We have incurred around 235 crores till June 2023 and balance approximately 360 crores will be incurred gradually. What is the good thing? All the capex will be primarily funded by internal accruals. With this, I can now open the floor for the question answers. Thanks a lot.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may please press star and 1 again. Participants are requested to use the handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The first question comes from Deepesh from Manya Finance. Please go ahead.
Yeah, hi. Am I audible?
Yeah, please.
Okay. So what is the status of the money which was supposed to come from JSW Steel?
Sir, things are progressing. We are en route to getting the evaluations in place for the various assets with the Ministry of Coal, and as we go through the entire list, we will get a better idea as to the timelines. Right at this point, we are in the midst of the exercise of the valuation of the assets, please.
As in the valuation of the assets according to ours and according to what JSW Steel is there any mismatch?
Not as of now.
Not as of now. And how much are we expecting, or what is the approximate valuation which we have kept for that?
Sir, हमारा तो जो claim amount है, that is there on the balance sheet, and as of now, to the extent that the exercise has been done for the assets for which the exercise has been done, there is no mismatch.
There is no mismatch. Okay. Wanted to know about the order book status. I mean, at the start of the quarter, how much orders were there, in this quarter, how many orders we've received, and what is the, how much have we converted into sales?
So we started the year, I think, with approximately order book of between 6.5 to 8 months. And as of now, we've increased that to around 8.5 to 9 months. This quarter, we've booked more orders than we have serviced.
Can you quantify with the numbers?
I'll get back to you with the exact numbers, sir. Gaurav, if you have the exact, maybe you can.
Yeah, so that would be close to around 5 lakh tons.
5 lakh tons. This is the order book closing position, or this is the added order?
So this should be, please, Gaurav, sir. No, please.
Yeah, this is the order book as on hand.
Okay, approximately 5 lakh tons.
Yeah.
And in this quarter, how many orders did we add?
This quarter, you mean in terms of the differential between the opening orders between April and June end?
No, actually, what I wanted is that by at April beginning, how much order book was there, how much was converted into sales, and how much order was added?
So we had an order book of around 4 lakh tons when we started the financial year. And so the order book has gone up by 1 lakh ton. And we have, in between, we have also done sales. So our net order book has gone up by 1 lakh ton.
Okay, net order book has gone up by 1 lakh ton, and out of the 4 lakh tons also we've done something that has been converted to sales also, right?
Yeah.
Okay, so maybe then net addition will be more than that. Okay, fine. And what is the debt situation, sir?
Debt, as we said in the beginning, we have a gross debt of around 2,200 crores, which has come down by around 250 crores from the 31st March period.
Okay. And in case if we, and hopefully we will get in this quarter the money from JSW Steel, most of it will go into the removing the debt?
Sir, as previously mentioned during the last call, the capital received against the mine will be distributed, a balance between servicing debt and potential further capital investment will be done. But the major concentration would be towards debt servicing.
Fine, sir. Thank you. Thank you so much. If there's any other question, I'll get back in the queue. Thank you.
Please.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Aryan Salma from Infinity Capital. Please go ahead.
Yeah, good evening, sir. So I have a few questions. My first question is how many Indian state ECL products are made available currently? And
sir,
also,
I'm very sorry, your voice is very muffled. We can't hear you.
Just one second. I'm asking you, in how many Indian states ECL's products are made available right now?
All of them.
All of them, okay. So I was going to ask that how would you widen your distribution network? Any light on that?
Sir, we are omnipresent in India and almost the entire globe as well. I think there are limited countries which are exceptionally protectionist in which we are not present. But apart from that, we're selling in 110 plus countries. So we're hitting a good number that way and growing in the sense that we are constantly looking for more opportunities, new markets.
Okay. Noted. So my next question is, what is the domestic and export market share of ECL, in specifically DI pipe segment?
For the domestic market, we'll be approximately somewhere between 25 to 28% at this point. And for the export market, if we compare to the exports made from India, approximately 65% of the export from India is done by Electrosteel castings.
Okay. Got it. Then lastly, this Nal Se Jal program has been a great demand driver for us during recent years. So will it be sustainable post 2024 also? And a follow-up of that is ECL also looking to foray into new categories like agriculture and irrigation, that kind of stuff?
So, sir, we are already supplying our products for the purpose of irrigation. Approximately 25-30% of our demand comes in from the irrigation sector globally. And in regard to the Nal Se Jal, I think the percentage that has been covered so far is approximately 65 or so. So there is a long way to go, and I'm very confident that the government is not going to leave this without reaching the 100% marker. So there is, agar aap dekhein, I think 2019 mein this was announced, and it's been around 5 years. If you remove the COVID years as well, we still took 3.5-4 years to get to 65%. So we are hopeful that this will continue, and also we have the Amrut 2.0, which is for the urban areas, which is coming in with an investment of approximately 3 lakh crores. So demand is very robust for a good few years to come.
Okay. So that's good to know, and all the best for the future quarters. Thank you.
Thank you very much. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Saket Kapoor from Kapoor Company. Please go ahead.
हेलो सर, मेरी आवाज पहुंच? Yes, sir. Sir, when we see the Q1 numbers, our EBITDA margins have dipped to 10.9. So taking into account the impact of the shutdown that getting went in the second quarter, what should be the EBITDA margin trajectory going ahead?
It will be better than the Q1. The Q1 was less, as rightly said by you, due to shutdown of Kalahasti unit. But second quarter will be definitely better than Q1.
We are expecting around 13 to 14%, sir.
Okay. Sir, our margin profile used to be in 14% for FY22, as mentioned in the presentation. And last year, because of the volatility and the higher raw material prices came, that ke karan it was at 11.2. So for this year, even factoring this 10.9 for Q1, can we look at an exit of 14 plus on a blended basis, 13 to 14 for the entire year as of now, depending upon the current benign prices of the raw material? Is it a good understanding?
Sir, it should be within that range.
Okay. And for the other income component, we see other income at 27 crore rupees. So can you give the breakup of the same? For what constitutes this other income? And do we have any ICD balances pending as on 30th June?
ICD balance as on today is 0. And 30th June it was around 15 crores. And other income is dividend received, interest received. Mainly interest income.
Okay, and this interest income is only on account of this ICD part only, or other instruments also where we have invested?
ICD and the temporary FD we have created out of the surplus fund.
Okay, sir. And sir, firstly, I would congratulate the team for the very detailed investor presentation, sir. It answers many of our questions, and we continue, and also for the ESG part of the story, which have been elaborated very well in the investor presentation. So kudos to the team on account of that. Sir, on the CI Spun Pipes category, so if you could elaborate where are applications for these into, and what percentage of our revenue and profitability are contributed from the CI Fund 5? I think 91,000 or 71,000 ton capacity is mentioned.
So, sir, to answer the first question, the segment for which it is used is sewerage. And for the percentage of revenue and profitability, I'll ask Gaurav to elaborate on that, please.
Sahejji, CI pipes would contribute around 2 to 3% of our total revenue, so not much.
Okay. And the fitting part also is subjected to 2 to 3% only, the DI fitting?
Fittings would be slightly more than that.
Sir, when we look at the growth for the pump segment, in the pump category, do we have this synchronizing part between pipes and pumps category? If there is a greater demand for pumps vis-a-vis for pipes, do we find the correlation for DI pipes also, or it is only for the long distance pipes that the pumps demand generally we find incremental demand? Do we have a correlation between the same?
I'm sorry, Saketji, I couldn't really understand your question quite clearly. Maybe
sir, I'm looking for a correlation between pumps and the pipe segment. Is it for the DI pipes also we find pumps being installed, or is it for only the long-ended pipes like LSAW and SSAW that the pumps category also comes into play? I just wanted a correlation between pumps and pipe segment.
So, sir, pumps per se have a plethora of applications beyond just the main lines. I think what you're referring to is the long distance main lines that are used. Yes, but pumps have a lot more of application. So when you talk about pumps that are used for the mainline purpose, then there is a direct correlation in the sense that the demand should be equivalent in the same. But again, as I mentioned, pumps are used for distribution lines and for many purposes beyond just that. It's difficult to put an exact number in the correlation between the two.
Okay. Right. And sir, the impact of the shutdown.
Sorry for interrupting, sir.
Yeah. I'll join the queue, ma'am.
Yes, sir.
Yeah.
Thank you, sir. The next question comes from Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir, and thank you for the opportunity. Sir, I just want to understand the competitive landscape. Basically, recently Tata Metallics is also going for a capacity expansion, which is in West Bengal, and even in southern region where you used to have a lone plant, now Jindal SAW has come up with Satwana. So just wanted to understand if the market is expanding to accommodate everybody, or there could be a little bit of heightened competitive intensity which could impact our margins going forward.
Sir, from the short to mid-term market, the demand is extremely robust. With the new capacities also, there is adequate demand for the margins to not get impacted. As mentioned a little earlier, there is substantial investments coming into the water supply and irrigation sector. So we don't see that as a problem.
So does this works on the southern market also, or we would now see Srikalahasti margins are more normalized, because historically it was a bit premium. Now with another 2 lakh ton capacity coming into the same space, which was previously operational, demand usually grows with a lag, right? So would we see more normalized margins in Srikalahasti also, or we would maintain the slightly better margin than the West Bengal region?
Sir, even today with the increased demand in the southern and the western markets which we cater to from the south, there is adequate demand for accommodating another manufacturer with Satwana's capacity and still to be able to command similar margins.
Understood. My second question pertains to our coking coal cost. If you could give us some insight that how the cost would move in the next quarter, coking coal as well as the overall cost of production, and if we get benefit on the fixed price contracts.
Hi, good afternoon. So I think on the coking coal market in general, we all know that the market has not sprung any surprises as such, and it continues to remain in a way range bound. That is the first thing. Now, as far as the company specific scenario is concerned, since we are largely dependent upon imports to take care of our coking coal requirements, so as of now, we do have certain tie-ups or certain inbound in place, which should definitely take care of the way we have done our product costing and budgeting and further planning. So definitely, if not more, definitely till the last end of this calendar year. Now, going forward, how the market is going to behave is something that I would not like to emphatically comment on. But having said that, since we are very much alive to our entire scenario and every single development or every single movement in the market, and we are personally very, very engaged and active in the entire scenario, definitely we keep reviewing this at our end on a very, very regular basis. And whatever it may be, we would definitely take a call, a decision based on any movements or indications we see in the market, which we would believe at that time to be in the maximum interest of the company, and try to cover ourselves maybe even beyond December if the situation so arises.
So, sir, I'm a bit lost here. I just wanted to understand the coking coal cost saving movement in 2Q versus 1Q, or what I can make out that we have already covered till December. So is that at a higher pricing which we have already built up inventory, or the cost would keep on gradually coming down? And if it is coming down, then what is the cost saving in 2Q or 3Q you are expecting? That's what
as of now, I do not think that the inventory build-up is at a higher cost. Secondly, it is not entirely inventory build-up at our end. It is just that there is some vessels which are in process, and other than that, we also have some inventory at plants. So in totality, depending upon our blend, this should take care of more or less this calendar year. But yeah, beyond this, I think because we try to keep improving on our blends and try to see without affecting the quality of the coke how we can optimize on the cost, it would not be right to share very, very exact cost data of what is the coking coal cost as such. Because it is not only coal, the blast furnace feed definitely consists of, other than coke, various other elements which you know, like iron ore, sinter, etc. Yeah.
Point taken, sir. Sir, just wanted to understand right now in our contract of 5 lakh order book, so are these a fixed price contracts or linked to basically pig iron index? How it is for us right now?
Sir, a majority of them are on fixed prices, please.
Understood. So, on a rolling basis, once as the costs start rationalizing, we should benefit, right? Generally, we should be benefiting in the subsequent quarters. If the costings
that is what we are expecting, please. Yes.
Understood, sir. And lastly, we have paid 250 crore. So, have our entire repayment for this year from debt has already been done, or some part is pending? If you could give us some insights into your debt repayment as well as the targeted repayment for this year.
The long-term debt is scheduled to be paid in a span of 3-4 years, and this year our commitment was around 200 crores. Out of that, we have paid 35 crores during this quarter. The balance is outstanding and will be paid on due dates. And working capital debt is on and off, we are using and not using. It is very, very fluctuating debt.
Understood, sir. Understood. That's all from my side, and all the best for future.
Thank you. Thank you very much.
Thank you.
So please go ahead, sir. Mr. Sriram, please go ahead.
Yeah. So I have three questions. So basically, what is our current capacity utilization? And if you can give a breakup in terms of the application-wise for the DA pipes, like how much would be for irrigation, sewage, potable or clear water, that would be helpful.
So the capacity utilization is 100% right now. There is no backlog by God's grace on that front because we see very robust demand. In terms of the percentage of demand between clear water, irrigation and sewage, this is something that fluctuates depending on the concentration by the various state governments. At this point, a major chunk is towards the supply of clear water. Going forward with Amrut coming in, we see some of the sewage picking up and reducing a little bit into or eating a little bit into the distribution of clear water, while irrigation stays at a robust 25 to 30%.
Okay. And sir, do you directly sell to the consumers or via EPC?
So the consumer here are the departments, sir.
Yeah, I understood. So do you directly sell to them or via EPC?
Both.
Both. And how much would be the split? If you can give, what is the direct versus EPC split?
I think, sir, it will be an 80-20 sort of a situation at this point. And
so 80 would be?
Direct to EPC.
Direct. Okay. That answers my question, sir.
Sorry. 80 is to EPC, not direct. Just to clear.
Okay.
Yeah.
Okay. Thank you.
Direct through EPC, I meant. Yeah, sorry.
Okay.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Raj Mehta from Robo Capital. Please go ahead.
Am I audible?
Yes, please.
Yeah, I wanted to know if I could get some trajectory.
Sorry, now you're not very audible, sir.
Is it better now?
Much better.
Yeah, I just wanted to get a trajectory on the revenue growth going forward. So we've seen that like from 2019 to 20 it was flat. After that it was a 20, 30, 40% growth. So what would we expect going forward?
Hi. So Q1, as we said, we had a plant shutdown. So revenue there was a dip. But generally second half of the year is robust in our industry.
Okay. And what about the full year growth, sir?
And so this year, we'll not have much growth because we are having the capex ongoing, which will be completed by close to end of next calendar year. And then we will be reaching at 9 lakh tons, so which will be 30% more where we are right now. And the full benefit we'll get to see in FY26. Having said that, some of the portion of the enhanced capacity expansion will come into play in next financial year. So next financial year we'll have some growth over this financial year, but the majority will come in FY26. So 10% approximately you can say in FY25 will have 10% growth, and FY26 we'll see the major growth.
All right. Thank you. That's it from my side.
Thank you, sir. The next question comes from Nagraj Chandrasekhar from Emerge Capital. Please go ahead.
Hi, thank you for taking my question. Just sequentially, you should be seeing an all-in decline in cost per ton of 2,000 to 3,000 rupees per ton. Just want to get a sense on, given the tenure of our order book is typically 9 to 12 months, would we see any decline in realization per ton, or would that be stable?
I'm sorry, sir?
Right, you should be seeing, based on what you said, a drop in your all-in cost of to 3,000 rupees per ton sequentially. Based on the fixed price contracts we have and the fact that our order books are, 9 to 12 months in tenor, typically booked out at fixed prices, that should translate directly into an EBITDA gain of the same amount, correct?
So, to a very large extent, you are correct, sir. A majority of these orders are going to be serviced within the time frame of 9 months, during which we will see an improvement in the costing. But it's not that there will be a direct 1:1 impact, because some new orders will be picked up which will be serviced within these 9 months at a lower rate owing to the lower raw material prices. But saying that, yes, there should be a substantial part of this cost correction should make its way into our margins.
Understood. And the shift in the industry over the last few years to your benefit of, like you mentioned, selling 80% through EPC contractors, reducing our receivable risk. Has that meant that the industry has moved away from fixed price contracts to sort of a price escalation, de-escalation clause pass-through, or is it purely fixed, but then obviously coming at variable intervals?
The majority of it is fixed, apart from extreme situations such as what we faced last year, where we had no other option but to get onto the renegotiation table even with our EPC partners. It's mostly fixed.
Understood. And is there any component in your cost this quarter of any raw material or finished goods inventory mark-to-market downwards, given the declines in cost of goods?
No, please. Nothing great.
Nothing much. Okay. Thank you so much.
Thank you, sir. The next question comes from Pashwa Veer, an individual investor. Please go ahead.
Am I audible?
Yes.
Great. Well, wanted to understand about the recent capex that you said will be happening or completed by calendar year 2024 or financial year 2024?
Calendar year 2024.
That would be after 1.5 years. Am I correct?
Yeah.
And what exactly was the reason for going for capex? Is it more and more orders that you are getting?
Yes, please. We are seeing a robust market, and being the leaders in demand, we find ourselves in a very opportune position to capitalize on the same.
Okay. So major turnaround of the company would happen post the capex is done. Am I understanding that correct?
So we'd like to believe that a good turnaround has already happened. And going forward, we'll see even better days. Even the inflow from the recovery of the coal mine stuck-up capital will help substantially in that.
By what time do you expect that capital flowing back to the company?
You mean in terms of the capital expenditure?
Payback.
No, the stuck-up capital in the government organizations.
Sir, हम जो optimistically सोचते हैं वो within this financial year है. परंतु गवर्नमेंट को थोड़ा इसमें पहले भी हो सकता है, हल्का बाद भी हो सकता है.
All right. And coming to the raw material costing, are you seeing the cycle on the downward side, or is it almost stable compared to the last year and the year before?
The raw material cycle right now is I would like to believe and say that it is in a kind of a stable mode. Having said that, we are definitely alive to any of the factors that may result in a shift in the current situation or any change there too. Yeah.
So currently it is stable compared to the last year, which was on the higher end, if I'm not mistaken.
Yeah, last year was dramatically very, very active, and we did see some record highs in the last year. Absolutely, you are very much correct on your knowledge on that. Yes, this year thankfully has not seen that kind of a drama in terms of the movements.
Okay. And what would be your major raw material input cost? Well,
our major raw materials that contribute to the larger share of our cost would be coal and iron ore, largely.
Yeah. Okay. So nothing on the power end, because I think electricity would be another thing too, right?
60% of power is captive. That's why this is not a major component. But you are right. Generally, it is one of the major components.
Okay, so 50% is already captive. I mean, you might be having those power plants by yourself, I guess.
Correct.
Yes.
Okay. And any benefits that you arrived at after getting the merger or with the Kalahasti pipes that happened, I think, last year or last year? Any significant benefits that arrived in the most company?
I think whenever two entities in a similar field of business merge, although we were operating in a lot of sync, being associate companies, but post the merger we see that homogeneity creeping in even more, and definitely there are severe cultural and systematic benefits that have come out of this merger.
But in terms of financial benefits for the company?
It will be difficult.
Keeping aside the cultural benefits?
I think it will be difficult to quantify in exact numbers.
Percentage is fine. Any approximate percentage or an outlook that would take this company to greater heights?
And if you see the numbers and if you see the overall performance, it has improved. And if you see the credit rating, we have gone to AA- by CRISIL. So that itself, it testifies that the performance and the balance sheet has strengthened after the merger.
All right, that would be it. Thank you so much.
Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Rajesh Agarwal from Money or Investments. Please go ahead.
Sir, can you quantify how much production was lost due to the maintenance shutdown?
We have lost approximately about 15 to 16,000 tons of production due to this shutdown. And that is very clearly reflecting in the P&L and the EBITDA margin.
Can you quantify in terms of rupee amount? 100 crores, 200 crores?
I think that would be a difficult...
250 to 300 crores.
250, okay. And sir, one more question. A lot of EPC contractors are saying there's a shortage of DA pipes. So in export, do we hope to get a better realization because there's a shortage of DI pipes?
Yes, please. Sorry, can you repeat the question?
A lot of EPC contractors are complaining because there's a shortage of DI pipes.
Yes.
And suppose we are into exports also, can we fetch a better realization in exports because of the shortage?
Yes. We do get a better price in the export market than we do in the domestic market, even with this deficit. There is a constant balancing act that we are looking at to maximize profitability and maintaining long-term market presence.
And okay, sir. And EBITDA margins will improve because of the realization improving or the cost coming down?
Both.
And will there be a growth in volumes this year?
Not really, sir.
Not much.
As mentioned earlier, the impact of the capital expansion will come in by the later quarters of the next financial year.
So major profitability will come by increasing margins by 3% to 3%.
Right.
Okay. And this quarter to quarter, there's been a saving in finance costs. We have paid debt. So what is the plan? How has the working capital behaved this quarter?
It is depending on the working capital utilization. Since the prices of coking coal have fallen down, there was less utilization of working capital, there was saving of interest cost. Some of the long-term debt is already paid.
Okay.
There is saving on account of interest on account of that.
Okay. What was the number of days for working capital this quarter?
Working capital generally 60 days. That's
60. Okay. And has been there any inventory write-off because of the fall in coking coke or any inventory write-off this quarter?
Till now, nothing.
Nothing much. Okay. Thanks, sir. Thank you.
Thank you.
Thank you, sir. The next question comes from Catherine from ULG Securities. Please go ahead.
Good evening, sir. This is Catherine Gill. I'm sorry, sir, I joined a little bit late. So, sir, this is regarding the proceeds that you are expected to receive for the coal mine that is deallocated. Sir, I'm not sure. I don't recall that. I don't recall, but I read somewhere that you're planning to reduce your debt with that particular proceeds coming in. I mean, is it true? Are you sticking to that or?
Sir, sorry, ma'am, a major chunk of what we will receive in terms of the coal money compensation will go towards reduction of debt, but we are also looking at utilizing a portion of it towards expansion.
Couldn't hear you.
I just repeat, a major chunk of the capital that comes in will go towards reduction of debt, but we shall also be using some of it for potential expansion.
Okay. So, could you please give us a guidance on how much reduction of debt and how much for, the capital expansion?
That is something which really depends on opportunities that come in front of us at that point. We are not we have not yet fixed upon the percentages so far.
It depends on how much money we are going to receive.
Okay, fine. Okay, that's all from my end. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Sushil, an individual investor. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes, please.
Yeah. So, sir, in continuation to the previous questions, if we differentiate our EBITDA between domestic markets and export markets, so how will it look like? That's first question. Second is, when we say 80% of our sales are through EPC, how is the collection cycle different from an EPC sale or direct sale? And the third one is, are there any imports into India of DI pipes? While majority of the large players are exporting, is there any particular category or something like that where India is importing DI pipes as well? So these are the three questions from my side.
I'll answer your questions in reverse. With the first one, there are no imports coming in from any other country into India. All the demand for the product is supplied via domestic suppliers. Can you just repeat the second question again, please?
So when we say our 80% of the sales come from the EPC contractors, we sell to EPC contractors and they in turn sell to the government agencies. So how is our collection cycle different, when we sell it to an EPC contractor or directly to a collection government agency?
So the EPC contractors is approximately 45 days earlier than the government bodies.
And what is the cycle of the government bodies?
Well, at this point, it should be somewhere between 90 to 120 days.
Okay. And my third question was regarding the EBITDA differential between domestic and export.
Sir, this is something that we don't like to share because considering our large chunk of exports, we can tell you this much that it's a substantial amount higher.
Okay. Okay. Sir, one more question. If we see this Jal Se Nal Se Jal scheme, so how much of our top line is contributed by this government scheme?
Sir, I think it won't be incorrect to say that a major portion of the demand, as I mentioned, irrigation is one part of it, export is another. But still, I think 55% or so of 50 to 60% of our top line is coming in from water supply, and majority of that would be Jal Se Nal. A part of it is Amrut, and a few parts are the other state-funded projects that are coming in.
And no, when all the players are coming up with a good amount of capex, and no government has achieved 65% of the targets. So, what do you see 3 years down the line? Say, if government achieves 100% of the target under Jal Se Nal, so then what will drive the revenue or in this segment?
So, sir, Amrut 2 is another very big project that has already started taking off. It's at a very nascent stage though. That will see a substantial demand source for us. Another part which is important to address is that Jal Se Nal is all virgin lines of pipes that are there, whereas a good chunk of India's pipelines require replacement. I think India's average leakage is anything between 35 to 50% today. So this is for the existing pipelines. I am very certain that our government is taking this up very seriously, and we'll see a good, consistent demand coming in from the replacement market.
And what are the annual tenders that are coming under the Amrut scheme which you mentioned? Rough estimate?
The total outlay for the center is around 3 lakh crores over the next 5 years. There are certain other elements of finance through state and foreign funding. It's a little difficult to exactly talk about the annualized outlay for the same, please.
Okay. Thanks a lot, sir.
Thank you.
Thank you, sir. The next question comes from Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, thank you for the opportunity. Sir, the volume loss that we have, that has happened due to the plant shutdown, this will make up in the during the remaining part of the year, or what should be our volume number for the full year, sir?
I think it will be the endeavor of the company to definitely make up this volume in the next couple of quarters, and I think on a year-on-year closing we should close the year without any loss of volume.
Okay. So last year we did 710,000, so we would be nearer to that.
Similar
to that. Sir, volume, have you provided the volume number for this quarter, sir? The tonnage part?
Sorry?
The tonnage you have provided for Q1, sir, what has been our production and sale number?
Yes, obviously. We have.
Yes, sir, बताइए.
Yeah, okay. So, we have produced for this quarter, DI pipe production has been total 1,63,000 something tons. So, you can say it is 1,64,000 tons.
Okay. And sales?
And sales have been about 1,56,000 tons.
And last year's comparative number?
So this was Q1 23-24. Now when you want to look at the Q1 of 22-23. Yeah. So Q1 22-23 production was at the same levels. DI pipe production 1,64,000 was the same figure. The sale was also 1,57,000 tons.
Okay, so when we are comparing like to like, there is no change.
No,
last year and this year.
This is when we are looking at into the pipe part. But in addition to this, last year we were able to produce, in addition to this pipe quantity, we were able to produce and sell pig iron to the tune of about 25,000 tons, which this year we have not been able to do so far.
So can you give that revenue figure for last year that contributed to the pig iron and the EBITDA number for pig iron segment?
I think this separately giving this number may not be so feasible, but how, sir, we'll try to
अच्छा सर, इस क्वार्टर में कोई प्री गारंटी नहीं है? हाँ
जी, हम आपसे प्रोडक्शन फिगर शेयर कर लेते हैं
जी सर।
पर इंडस्ट्री स्टैंडर्ड तो आप थोड़ा समझते ही होंगे, तो उससे आप
समझ गया साहब। माधव जी समझ गया सर। सर लेकिन इस क्वार्टर में प्री गारंटी की कोई सेल नहीं है हमारी, जैसा अभी आपने बताया, क्योंकि शटडाउन था तो
मिनिमल है। पिछले बार हम 26,000 टन के आसपास बेचे थे, इस बार करीबन 10,000 टन बेचे हैं। तो हमारा जो 15,000 टन का लॉस हुआ है, हम फॉर्चुनेटली उसको प्री गारंटी के सेल तक रख सके, बट हमारी पूरी चेष्टा है कि ये जो हमने प्रोडक्शन लूज किया है प्री गारंटी पे, उसको हम मेकअप करें।
सर ये कन्वर्जन 1:1 है, प्री गारंटी टू DI पाइप, मतलब 15,000 टन गेट कन्वर्टेड इनटू 15,000 टन इनटू पाइप।
लगभग जी, मोर लेस।
ओके सर। सर एक सिर्फ अंडरस्टैंडिंग और एक सजेशन था कि ये सर हमारे जो नंबर्स आते हैं वो हरदम फैग एंड में आते हैं। जब भी रिजल्ट सीजन, अर्निंग सीजन होता है, उसका फैग एंड जब कंप्लीट होने जाता है तभी हमारे नंबर्स आते हैं। तो आप अपनी टीम के संग वर्क करें सर, कि जिससे हम अपने नंबर्स को अर्ली प्रेजेंट कर सकें। इस पर सर आप लोग जरूर वर्क कीजिए। और सर डिविडेंड डिस्ट्रीब्यूशन पॉलिसी पर भी मैनेजमेंट को वर्क करना चाहिए कि हमें गाइडेंस मिल जाए क्लियर कि आप कैश फ्लो के अनुसार किस प्रकार से डिविडेंड वितरित करेंगे अपने इन्वेस्टर्स को। एंड सर अभी भी सर हमारे लास्ट ईयर के एजीएम का भी कोई अनाउंसमेंट नहीं मिला है, लास्ट ईयर का डिविडेंड भी अभी ड्यू है। तो सर ये सारे हमें सही आंकलन नहीं मिलते हैं सर। मैंने फॉर नाउ वी आर into the next financial year, we are proceeding towards the first half, H1, and still now the dividend for the last financial year is still unpaid to the investors. So we should try to culminate all these factors within the first quarter itself and not keep things pending till September. So that has been the practice over the years. So when you are getting engaged now with investing community, trying to create value for investors, giving us the insight. These are the teaching problems which we as investors and people have always seen in the company. So please take steps to correct these anomalies, which can be done very easily if they are अगर आपके नजर में पड़े तो. So these are my
yes sir, we highly appreciate your feedback and we will definitely work on these elements. Thank you.
Okay, thank you sir, and all the best to the team.
Thank you very much.
Thank you sir. That will be the last question for the day. I now hand the conference over to the management from Electrosteel Castings Limited for the closing comments. Over to you, sir.
I would like to thank all the market participants for their valuable time and continued interest in our company. We believe the company is well positioned to be benefited from the growing water infrastructure spending in domestic and export markets. Electrosteel Castings will continue to maintain its industry leadership stance with its capex plan, competent management, customer delight proposition, backed with trust on quality coupled with a robust balance sheet. If in case you have any further queries, kindly feel free to reach out to the ENY IR team. Thank you. Have a great evening.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a pleasant evening, everyone.